Everybody on YouTube, Griffin here, coming back to you guys with another video. First and foremost, if you're new to the channel, definitely consider hitting that subscribe button below if you're looking to communicate with a bunch of like-minded individuals. And while you're at it, we have a totally free Discord group chat that's down in the description box. If you're wondering what Discord is, it's just a app you can get on your phone. It's in the App Store, both Google and what else? Google Play, Apple, all that stuff. And you can get on your laptop as well. It's just a little platform that you can use kind of like a chat app. So that's what we use to communicate with a bunch of like-minded individuals. There's about 50 of us in there. And it's really easy to sign up, so definitely check that out while you're at it. But I'll just hop right into this video. You guys know that have been with me for a while that I usually do streams, and I want to apologize for that. Those of you that are in Discord, group chat, and all that know that I've had some issues lately that I'm still like getting resolved and whatnot, just health related and whatnot. So I apologize for that. And then, like I said, the streams, my streaming software that I'm actually using to actually record this video records just fine, but for some reason it's been messing up lately with the streams. So I'm gonna try to get that figured out here. Hopefully by the weekend and next week I'll be able to start shooting some streams again. That's the goal. But just hang with me as for that. But hopefully you guys have had a good hot start to your holiday season. Hopefully you guys had a Merry Christmas and have a Happy New Year and all that stuff. And hopefully, more than anything, you stayed green. Obviously, we have been very, very, very bloody for the overall markets. I have AWZ pulled up right now because that's what I'm going to talk about briefly. It's obviously what I've been trading big time via vertical spreads for the most part. And today, actually, the day that the Dow Jones had its biggest jump ever, as far as I know, is like 1,100 points. I think it was the biggest green day on record. I actually made a little bit of money too. I've pretty much wiped out all of my losses that I had from my very first trade on the Apple vertical spread trade, my very first vertical spread that I was kind of experimenting with that lost like, I think it was like $205, something like that total. So you can see I've pretty much wiped out all that now. Today I made $70. I went ahead, I had 10 positions on this vertical spread. It was the 35.50 to the 34.50 strike, and that's really what this video is going to be about. It's just how do I go about picking my strike prices to get the max premium, have the best % chance of profit possible, and how am I lately, because literally I've not had a red trade now in about a month. I've traded probably 20 times in between that, if not more, and I haven't had a single red trade now ever since the Apple trade. I learned a lot from the Apple trade, and if you guys are wondering why my net liquidity is at 624 but my buying power is 1,024, it's because I did deposit $400, so that's where that $400 difference is. They go ahead, Tastyworks does, when you have the margin account, they give you the money up front, especially when like it goes through fine, it didn't get rejected or anything. It just typically takes a business day, sometimes two, depending on your bank, for it to actually completely go through and show up in your net liquidity. But I do have $1,024.25 essentially to play with now. This morning, of course, is just under $1,000, made $70, so that added more. So we're finally over $1,000 that we're playing around with. Obviously not playing around literally, don't ever play with money, right? But so I'm just gonna get right to it. I'm not gonna necessarily worry about, I mean, we could go into just how awesome of a day it was overall for the market. SPY up 5%, Dow Jones is up pretty much 5%, NASDAQ was up almost 6, I think, around 6%. So I mean, good day obviously overall for the market, but it's obviously been very, very bloody the last few weeks, few months really. But we're just gonna hop right in. I'll just show you guys real quickly how I go about doing these trades. So obviously I tend to do the one that's closest to expiration. I did this December 28th one today, and obviously it made me a quick little $70. It did take a day trade, which obviously as long as you maintain your day trades and whatnot, no big deal. This is literally like my second or third day trade in a month. So I mean, I'm not like worried about it or anything. I typically don't day trade, but I had the day off from work because I had my fiance's first sonogram, so obviously I wasn't going to miss that. So I was just off today, day after Christmas and whatnot. So I played around in the stock market. And so we're pretty much going to do the same thing. However, since we obviously had such a big day overall, EWZ even had a pretty decent day. In all honesty, it was up about 2%. which is a pretty big move for it. Obviously, it's had pretty big moves down too recently. It's tested some ultimate supports right around $36, and I actually placed my short put spread, which short put obviously means, for those of you that are new, a short put credit spread means that you're going to collect a premium, and as long as the stock stays below a certain price, you're going to get to collect all that premium if you hold it like till expiration. But obviously we don't hold till expiration for the most part because there's very, very little reward from it. If I had held till expiration, I would have gained about an additional $17 to $20, something like that, off of this trade after commissions and fees. Just wasn't worth it, right? Why would I risk $70 of profit, $67 or something after fees and whatnot, $67 worth of profit to hold something 2 more days to collect $10 on those days, when I can roll that into another trade and who knows, possibly make another $40 to $50 to $100 within the next day or two on top of that. So I'll talk more about that in future videos, but I placed it actually down here when we had a little dip this morning in EWZ. We came up, I was up about 20, and then down here I was actually down $40 at one point on this position, just because obviously as it gets closer and closer to your strike, the options are going to become worth more, which means once it gets in the money, you would lose, you quote unquote be losing your ass on the position. But obviously you don't want to put yourself in that position. I had faith in the position, and sure enough, ended up taking off and I made good money. Now, with that being said, what was I actually going to do right before the bell? I got filled, my order got filled literally 2 minutes before the bell. I was sitting here looking at strikes and I was like, hey, this would be a good video for everybody to see. So what I was kind of looking at, I was like, okay, so short term, I'm going to be a little bearish. I was like, overall, I'm slightly bullish, especially on EWZ, because when I just go back and look at the recent chart, 20-day chart, I'm like, okay, it is still slightly on a downward pattern. I need to actually draw some new trend lines. It's been a while since I did. But you can see it is still kind of on a downward trend, but it's approaching some pretty strong resistance right around 37.50. And I saw that it got rejected because it pushed up towards 37.50 right before the bell, and it got rejected. So now, with that being said, that's going to be, I know we're pretty close to that resistance, right? So I'm going to be slightly bearish, since this is only going to be a 2-day position, day and a half, 2-day position. I'm going to do a short call, which means I'm shorting the call, not long the call. If you were long the call, you'd expect the position to go up, the stock to go up that you're going in, right? So a short call means that you're thinking it's going to stay below a certain price, and by doing a short call vertical spread, you're going to be selling and buying the call. It's a covered sell essentially, to make your money, and it doesn't take as much capital either. So what we're going to do is, like I said, we identified the resistance right around 37.50. Now, what I want to do is I want to say, okay, well, where could be some next level resistance after that? I would probably say somewhere around 38. So then what I'm going to do, since I know 37.50 is going to be a strong resistance, and then 38, what I'm going to do is I'm going to be like, okay, let me look at this. So if I did this specific trade, I have a 73% chance of profit currently, which is roughly what my trades usually start out as, somewhere around 70 at the lowest, usually 72 at the lowest. 72 to 78% profit, chance of profit is where they usually start, and then they usually obviously continue to go up, obviously, as the position goes the way you expect it to. But I'll look at this and I'm like, okay, I could collect. See, it's a little bit wide here, so I know I'm probably going to get it somewhere around 11 cents, right in between the midpoint and on the low end. So I know after commissions and fees, I'm looking at roughly $8 off of a $91 investment. I look at that and I'm like, okay, that's fine. That's right around what, 8%, 8 to 10% in a day, 1 to 2 days. I'm not going to complain about that whatsoever. So now what I'm going to do is I'm going to go in here, and since I know my buying limit, I'm going to go ahead. This is what I did this morning. I went ahead, I looked at the position, and I was like, okay, how much money do I have to play with? And then I took a position. So this was the trade I was trying to get filled, like I was trying to place right before the bell, but I ran out of time. And it sucks because you can see the return is pretty nice. I mean, you're talking almost a $90 return off of a $912 investment in roughly 1 day, 1 to 2 days at the most, about a day and a half. So that trade, and obviously this is probably going to come down slightly. I'm probably going to end up getting it for, like, depending on where it opens tomorrow, probably somewhere around 10 cents per each position, aka $10 on options terms. So I'm gonna have roughly, was it 8 positions, something like that, or no, 10 positions, and I'll probably end up getting them for like 10 cents, aka $10. So about $100 to $110 before fees and commissions. After fees and commissions, you're talking, like I said, around 87. I'll probably end up getting it for around like 70 bucks, something like that. $70, and then it'll reduce my buying power probably less than 900, because like I said, this is all based off of when the market closed. Theta and whatnot's going to kick in the morning, and then that'll lower everything some, because you're getting closer to the end of expiration, obviously. So I'm probably looking at somewhere around $70 of profit roughly off of probably somewhere around like a $850 investment. So that's by no means little money or anything. I mean, you're talking 5 to 10% return in 1 to 2 days. Like today's trade, for example, I made $70, and that trade was also right around $900. So I mean, again, that was right around in between 5 and 10%, and that was in one single day. Now, obviously, the market overall was up about 4 to 5% on the day, but this was a really easy trade. I submitted the trade. I just kind of watched it a little bit here and there throughout the day. I had some stuff to take care of throughout the day. I wasn't glued to the computer like a lot of people are that day trade. I just submitted it, went did my stuff, and then moved on. So, like I said, I try every time whenever I'm taking a position. Like I said, I identify a potential resistance or support if I'm betting more on the short put side, which I'll show you guys an example here in a second, a theory example. So I identify some first resistance, 37.50, and I usually go just one strike above it. That way I buy myself a little bit of cushion in case if it does happen to just burst through that, then I have another 50 cents to $1 to go. And then obviously I always leave about, I never really go here just because, I don't know, it's just me personally. Some people might like to do other things, but whatever. I mean, to each their own. I mean, your potential for profit will go down slightly. Sometimes it goes down more than 1%. It's just something that I do. I mean, some people like it, some people don't. But yeah, that's how I set up mine pretty much every single time. Like I said, I mean, if you're a little bit more risky than me, by all means, if you identify that resistance and you are super confident in that resistance, then by all means, you could place this trade. You still have a 2 in 3 chance of this being a winner, and you're talking, what, like a 30+% return on investment on this one. You're probably going to get it for somewhere around 28 realistically, maybe even 27. So I mean, you're talking, like I said, right around a 33% return. So I mean, to each their own. I just like to buy myself just a little bit more cushion. Am I giving up a bit of premium? Sure. I mean, my premium's essentially cut in half here, but my potential for profit's up like 10% higher. I'm buying myself a little bit more, like I'm taking down the risk. I'm managing risk versus reward, essentially. I like just getting consistent profits over and over. I was doing the more risky stuff, and I kept losing. I don't like to lose, especially when it comes to money. I don't know about you guys, but I do not like to lose when it comes to my money. And ever since I've started trading this way, I haven't had a single loser in about like 4 weeks now. I'm going on like a whole month now without a single red trade. So, and that's the thing with red trades. Once you get in a hole, it takes forever to get out of that hole. I mean, you can see I'm still minus 41 up here in my account that I've been trading with for like roughly 2 months now, something like that. But after this week, it's probably going to be in the green finally. But why put yourself in that position when you can just go based off what works? I mean, I'll show you guys. Maybe you guys can see like my activity. Wonder how far back we can go. Let's just do like the last 14 days, for example, so you guys can see. I mean, you guys can literally see all these positions right here. I made money off of them. I made money off of every single position here that you see. So, like, I mean, it's proof that it works. It's just a matter of finding, like I said, I'm not saying that everybody should do this specific type of trade or anything. I'm just showing what works for me, what doesn't work for me. I know that we've had some people in Discord and on YouTube that kind of wanted this kind of video, like how do you choose your strike price, how do you go about picking when to do a short call versus a short put spread. I mean, like right now, there's no way in hell I'd be doing a short put spread. You got to think about it in terms of the call and put option. When you think of it in the term of calls and put options, it'll be so much easier. Would you place a call right now when a stock just jumped up 2% that normally only hovers plus or minus 0.5% on a daily basis? You'd place puts more than likely, right? That's a bearish position. So what would that mean? You're going to do a short call spread. Now, say this happened to have gone down another 2%. What would you more than likely do? You'd probably do a short put spread, not a short call, which is why early on this morning when it was actually down almost a whole percent, I did a short put spread. I was like, this thing's probably going to bounce at some point. I honestly didn't think it was going to bounce this much today. I thought I was going to have to hold it another day or two, but that's how it plays out a lot of times. I mean, you have a good feeling, you have the technicals are setting up good for you. Go to the 1 day. The technicals are setting up good for you, and then sure enough, it all plays out in the end. So just go with what works. Don't try to get rich quick. I mean, I pretty much take back what I said about if you feel like doing that, don't do that. It's just not worth it. The rule of thumb is just stay above 70% chance of profit. If you stay above 70% chance of profit, 7 out of 10 of your trades essentially are going to be winners more times than not. Are there instances where you have a 70-80% chance profit and then the market just goes to crap on you and then you lose? Yeah, but you just have to handle those as they come. Sorry about that. You just have to handle those positions as they come. I know me and Clint were talking about that in the Discord group chat earlier today, but hopefully this video did help you guys when it comes to picking strike prices and whatnot, when it comes to placing your vertical spreads. And then obviously with the iron condor, you would obviously look on the flip side on where there's going to be some support, but this is just a vertical spread video. If you guys want an iron condor video about how to pick the strike prices on that, let me know in the comments and I'll definitely get that video or stream hopefully out for you guys within the next few days or so. But yeah, that's pretty much it for this video. Hopefully you guys did enjoy it. If you did, definitely make sure to smash that like button. I really appreciate that. And if you're new to the channel, like I said, definitely consider hitting that subscribe button below. We'd love to add you to our awesome community of like-minded individuals. But until next time, guys, keep on going out there, making those profits, covering your profits, and achieving some financial freedom this year. And I'll see you guys, like I said, hopefully in the next few days, I'll get the streaming software fixed and I'll be able to do some streams. But in the meantime, I'll still keep doing videos for you guys as always. Until next time, take